Trying to scale at the wrong time can literally destroy your business. Let's talk about how to scale successfully. All right, everybody, welcome back to another episode of Knockin' Hard. My name is Curtis Johnson, and I am your host of this here show. And we're talking about scaling today, and this is not an area that there's any lack of videos on. In fact, I was poking around, and there's about 100 different videos that I could find just with just a couple correct keywords, and there's a lot of overlapping topics. But you know what isn't talked about quite enough is when you should actually scale. There's a lot of videos on techniques to scale, but not enough people are talking about when you should actually scale. And in looking over this and looking over past experiences and what is a good kind of measuring stick for when you should scale, I noted there are 4 real notable reasons or 4 questions that you should be asking yourself in order to assess, okay, am I ready to scale? Is this business that I'm in really at a place that scaling makes sense? And they're broken down into 2 real sets. One of them is separate than the other 3, but the first one, and that solo question, I would say is a very important question to really ask yourself. And really, the first question is, why are you trying to scale? A lot of business owners don't necessarily look at the reason in which they're trying to scale. Sometimes it's just this concept that they go, I must scale my business. I've seen countless businesses that just look at the number and go, we must go up, 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 no matter what. And sometimes they don't necessarily look at, am I ready for that? And that is really the first question. So why are you trying to scale? Are you just trying to scale simply to increase your own revenue? Are you trying to make more money? Are you a small business owner, maybe even a medium business owner, and you're just looking at it going, I really just need to make more money? Because that's a really important thing, obviously, to want to have happen. But if you're a small business owner and you're looking at that, there's a lot of other things you should look at before you really go and try and scale up. And what does that really mean? What does it mean to scale? This isn't one of the 4 questions. We're just going to throw this in. Call this the 4.5, even though you would ask this at the very beginning. What does scaling really mean? Are we talking about just increasing sales? Are we talking about you want to do more volume? Are you trying to talk about making more money? All of these are kind of nuanced questions when really if you're just saying, I would like to increase the amount of money I make, there are a lot of answers to that don't necessarily include increasing the amount of sales that you're doing, because really that's a key part of scaling. If you're talking scaling, you are talking about increasing market penetration. You're talking increasing the amount of sales. That's really what we're talking about when we talk about scaling. So if you're really just talking about making more money, not changing the volume of sales that you do, there are many things you could do. Why don't we look at decreasing the expense associated with operation? Do you have staff? If you have staff, you might want to look at, okay, well, how much are you paying as a company for healthcare? We have a company I just worked with, a small school, and they were paying a substantial amount too much. I'll give you another example. I was working with a accounting firm, and they paid. We found some methods to change the type of health plan or benefits package they had for their employees, and that decreased the cost of each employee's health to the company by 20%. So 200 employees, 20%, we're talking about millions more into the pocket of that business owner. So that could be one area. But then also, do you have anyone who's handling any CFO services in a different way? Do you have anyone who's focusing on reducing expenses? As a profession, there are professional services that we work with as a company that specialize in doing nothing but decreasing the expenses that business owner has on their books. Maybe they have uploaded staff. Maybe there are certain types of staff that are too expensive, or maybe they could get a higher quality in one area, or contracts are too. There are so many areas that are covered in expense reduction or fractional CFO type services. And these are important things to be asking yourself, because we work with clients all the time on the expense reduction side. But then also, again, if we're talking not scaling, we're going to put scaling to the side for another second here. But let's say we're talking about just making more money. if you're talking about making more money, it's not necessarily something that you have to go into your business for. What about on the back end? Are you paying too much in taxes? What does your tax team actually fundamentally look like? I'm sure if you have a quality, solid business, you probably have a bookkeeper who's going through your situation. If you don't, great, stop right there. And if we were just working with someone who's a solopreneur, he's been PNC for a couple decades, he does life insurance, and sat down with him and he's like, yeah, I'm one of those shoebox kind of receipts kind of guy where I don't really have all of these pieces pulled together. Well, that would be the first area to start. You got that? Great. Are you working with a CPA? Now, here, I'm going to give an example for myself. When I first came into the workaday world, I was in life insurance, and I went to my mom and said, Mom, who should I do my taxes with? And she was like, yeah, I do my taxes with this particular person. I was like, great. My mom's really smart. I'm sure he's a great CPA. Turns out after I even stopped working with him, he wasn't a CPA. Now, that doesn't necessarily mean he's not quality at what he's doing, but you should know who and what qualifications someone brings to the table. Are they just simply a tax preparer? Are they a CPA enrolled agent? What kind of experience do they have? What do they offer as a service? Those two things are important questions to ask, but then are you doing strategic tax planning? For example, are you meeting quarterly with your CPA to go through all of the strategy you should be implementing in tax year? For instance, we're in 2024 here. Are you taking advantage of actions that could recategorize your income in the current year before the year is over, so that the IRS doesn't look at that as taxable income? There are a lot of things like that. Are your entities optimized? All of those things these are all examples of problems that you could solve immediately that have nothing to do with scaling. 9 out of 10 business owners overpay in taxes. Most businesses have never taken a second look at their expenses. I read a study the other day. I couldn't give you any idea where it came from, but that if you simply just switched out all of the service providers like your cell phone, your internet, and you did that every 12 months, you'd save something like 60 or 70% just on those expenses alone. So all of these are little nuances you should look at before you go to scaling if you're simply trying to make more money. Now, let's say you've gone through and you're like, yeah, okay, good. Those are all great solutions to this problem, but I want to scale, and maybe it's for another reason. Or maybe price, the amount of money you want to make is part of this reason, but it's still something you're interested in scaling. Okay, good. We're there. We are now at the point where you're going, no, Curtis, what I'm trying to solve, shut up with all the rest of this stuff you're talking about. Great, understood, got it. No, I want to scale. So if you want to scale, here's your first question. The first question you should ask yourself after you've asserted, yes, I want to scale. If you're at that point, the first question you need to ask yourself is, do you actually have a quality product that not only can, but should be scaled? A lot of people never ask that question. Should my product be scaled? Don't forget, you are part of a larger ecosystem. If you don't ask yourself at some point, is my product actually good enough to be scaled? Do I regularly get referrals from my existing clients to other individuals? Am I good enough that I get referrals? Is a great indication of whether or not you have call it scalable business or a good product that should be scaled. I'll give you an example. I know very intimately a company. I never worked with them in terms of, I never worked with them as their client being mine, right? But I worked in a disconnected fashion with them, very, very familiar with their involvement or with their product and very involved in that process. And they have a problem where even some of their internal staff don't really particularly like the quality of the product. I did a little bit of work with them, and I had to personally take over a couple key pieces that really needed to be honed in a little bit better in order for that to be, you could call it an exchangeable product, something that at the other end of it, I was excited to give this to one of my clients. And I'm just, for the sake of anyone who knows closely some of the companies I work with, I'm going to leave out the type of industry, but long and the short, with that company, I was always kind of like, oh God, I would love to work with them more, but they're lacking in this particular area of the quality of their product. So that company always had a problem scaling. The CEO kept hammering and pounding, we need more sales, we need more sales, we need more sales. The number of leads are all dried up, and no one seems to be like interested when we reach out to them to, dive in. We send them instances of our past work, and seemingly our closing ratio is pretty low. Well, you might want to take a step back and go, do we have a quality product? And not just like in our own sort of like, not in our own head, but do we actually have a quality product that's indicated by the value in the marketplace? Are people, going crazy to use our product over and over and over again? So you have to ask yourself first, do I have this quality product? If I have a quality product, great. Check. If you have all the clear signs, you've looked around, people refer you regularly, you're not struggling with the lead flow, and maybe re-sign. Call it, do your clients continually buy from you over and over again, or do you have a lot of one-time clients? These are important pieces to this, because if you have a lot of one-time clients, it's a good chance that, you might be in an industry where they can only buy from you one time, but save that situation. You might have a quality problem before you ever look at really, should I scale? So fine, we're gonna assume that you have a great quality product. Now what's next? What's your second question? Your second question is, can I scale while, if my sales double, does the amount of time I have to be involved also double? In other words, if the quantity is tied inextricably to my time, you actually don't have a company that's quite yet ready to scale, or a product that's ready to scale, simply because it's that whole adage, a bricklayer can only lay so many bricks, and you have only so many hours in a day. You can only scale those hours so much before you're going to run into a problem of you've just run out of time in the day. So you have to make sure that the product process aren't tied in a direct fashion to your own time. You should have assessed some of it, and I talked about this a couple episodes ago, but I talked about how you have to really take an assessment of your business across the entire breadth of the business. You have exec structure, like the executives who actually run the business. Then you're talking about, okay, what is the legal side? And then now you've assessed legal. Do I have the staff to really run the different departments of this business? Do I have sales that can efficiently push this thing forward? Do I have all the treasury, financial lines, some of the things we were talking about earlier? Is that all locked down tight? Is my operation to deliver the product or service really tight? Do I have quality control in place? How do I get new clients? All of these are pieces that if all of that is just tied to you, you're gonna have a really hard time scaling. And if you don't have that nailed down, then what you're going to run into is you're going to hit a ceiling, like a glass ceiling on a business owner scaling sense. And that's not something that you can really scale past without making an operational structure change. So make that change, figure that out, and then you can look at, again, okay, now can I start assessing the ability to scale or timing of scaling? Once you've done that, you also have to then really take a look at pricing versus the cost to produce your product. Are you healthy as a producer of a product? What's your margin before you get into, call it operational cost? Just strictly speaking, like if it's a service-based business, the cost of the staff to literally deliver that service, or your own hard costs, like if you're building, I don't know, a wood table, it would be simply the cost of the wood to actually, use to make that table, the cost of the wood, glue, over time, the cost of blades. That would be your hard cost to produce the product. If that isn't in that 80% range, like it only costs you 10, 15, 20% to actually the cost of goods in order to create your product or service. That's really a very important margin. And that can obviously be handled in a couple ways. It might be a matter of increasing price. It might be a matter of decreasing the cost of materials. That could be through scale, understandably through scale. And what I mean by that is cookie business. If you go and buy your flour from Publix or Vaughn's or Albertsons, depending on where you are in the country. I tried to hit East and West Coast. If you're out of the U.S., I'm sorry, shit out of luck. I don't know anything out there. But if you're buying your bag of flour on a very retail level, well, good. You go buy now a 100-pound bag. All of a sudden, your cost of goods goes down. So you can reduce cost of goods or increase price. Have you actually looked at what the marketplace will have or will handle in terms of price? And it might not be for your product or service exactly, like your literal branding of your product, because what if your branding sucks? What if your marketing isn't good? What if, you take a look at one particular influencer's ability to sell something for double the price? Like, these are aspects that you need to assess, because if you can take your product, reduce the cost of goods, or increase price, all of a sudden your margin is more scalable. And these are important pieces to look at. If you really are 50, 60, 65%, 70% is the profit after cost of goods. Now, I'm not talking about your net profit. Let's talk like gross profit concept. If you don't even have that right, you're not necessarily ready to scale. Because after your cost of goods, now you have to look at cost of acquisition for new clients, new sale. Like, to get a new sale, what are you willing to spend? 10, 15, 20% of every sale should be going back over to that. But hey, if your cost of goods is too bloated, then all of a sudden, at least in relation to the selling price of your product, you don't necessarily have a product that if you kept scaling, it's like, this was, I believe, a Dave Ramsey thing. I think he was saying if the cost to sell a melon, if you lose 20% every time you sell a melon, you don't solve that by getting a bigger truck. It's just one of those points where you have to really assess, do I have a healthy margin? Do I have healthy operations with which to scale? If you've answered these key questions right at the beginning, then you probably are in a position where you can start talking about how. Now you've assessed it and gone, I can and I should. If you have I can scale, because it's not, again, tied to you in terms of your time or your personality, and you actually have the staff to be able to deliver a scale. Now, it doesn't mean I'm talking W-2 employees. You could be doing it purely and totally on subcontractors. If that's the case, great, beautiful. But the point is, if you've assessed the scalability of the delivery of the product is actually good enough to scale itself, and then that you really have that price versus cost of goods figured out, then you're sitting here in this beautiful place, which is, and correct me if I'm wrong, if you're out there and you're going, well, you're missing two of the most important pieces. To me, why do you want to scale? Then these other three pieces that we just laid off here, if you're sitting at that point, now you can actually start talking about strategy, ways to scale, different markets to go to. Are you going left, right, up, down? There's so many pieces to scaling that are all very important. But first, make sure you've gone through this process and ask yourself, should I actually scale? Beautiful. Well, we'll be talking a lot of strategy in other episodes. We have a lot of really interesting interviews actually lined up to talk about other individuals who have gone through this scaling journey successfully. No one is ever unscathed. So if you like this one, like it, subscribe, and we will catch you in the next episode of Knockin' Hard. Thanks so much. Take care.